Bitcoin is currently retesting a major level of high time frame support. In today's video, we're going to be discussing what to expect if Bitcoin drops below this major support, as well as the possibility for a bounce. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing day today. In today's video, we're going to be taking a look at Bitcoin from a short-term and a macro perspective, going over the current price action, what to expect, and how to prepare for what happens next, as well as the major high time frame levels of both support and resistance in regards to how low Bitcoin could go if we lose this current support and how high Bitcoin could go if we continue this trend upwards and bounce. Now, before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you're interested in trading, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to the group chats, the general chat, the trading chart and education chat, the trade setup chat, the news chat, the daily video chat, and the help chat. If you're interested in joining all of that with over 600 members, contact us in the pinned comment of the free channel for more information. Let's go ahead, guys, and dive into the video. So starting on that market data, we have seen quite a bit of turbulence in the last 24 hours of Bitcoin actually having a pretty substantial correction on the 4-hour chart, taking us all the way down to retest this major area of high time frame support, which is sitting at the price range between 40,200 and about 40,650. As you can see, we have had that correction over the last 12 hours, which resulted in a correction all the way down to retest the upper level of support of this support range. If you did watch our prior video, we discussed this was a major possibility. We told you the majority of people are not prepared for this, and as a result, we did see over $200 million in liquidations for $195 million coming from the overexposed long positions as Bitcoin tumbled. Looking at 24-hour volume, we are up 20%, sitting at a total of 111 billion. Moving over to the broader markets, we can see the DXY has now found support on both that 50 EMA as well as that horizontal zone of resistance. Overall, it is quite bullish right now. It is looking relatively strong. We would expect the DXY to be continuing upwards to the next level of resistance at the 105 to 105.6 range. Moving over to the S&P, a pretty amazing candle here on that weekly. We can see of just 22 hours remaining, this candle is basically pushed all the way back up to that weekly open price, looking pretty strong right over here. However, we do need to break that weekly candle above that prior weekly opening, which is sitting just over $4,800. A weekly close above this level will trigger a continuation upwards for the S&P 500. Until then, we are chopping between this level of support and this level of resistance at this higher time frame level of resistance. Thus, a break below the weekly closing price will result in a break toward that downside, guys. Moving over to the Dow Jones over here, we can see a very similar pattern going on. A bit of strength shown in the last 24 hours on that weekly candle with 22 hours remaining. If we do not get above that 38,000 level, we are not expecting a continuation upwards here for the Dow Jones. We'd actually expect a continuation into our range of support. If we are able to break above this local high and close a weekly above, we would then expect a continuation upwards and for that uptrend to continue higher. Enough said about that. Let's go ahead and jump into Bitcoin. But before we do, a quick word from Bitget and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume, they both have extensive liquidity pools and market pairs offering up to 125x leverage, and most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump over to Bitcoin. So a lot to talk about today because Bitcoin is sitting at a very delicate position, an incredibly important position on both the short time charts and the high time frame charts, as this level, this area of support is the flipping point between the weekly and monthly uptrend and Bitcoin entering an official weekly downtrend, a very important level that Bitcoin needs to remain above, otherwise we could see an extended correction for Bitcoin. So let's go ahead and first and foremost talk about what is happening and why this level is so important from a high time frame perspective. So if we take a look at Bitcoin over here, we have the 3-day chart up. We've got a few key levels we want to be looking at. We have our major level of resistance, which we all know very well by now, which is the 46 to 48k level. This is the major resistance that Bitcoin retested after basically a 1 full year long uptrend. This is the point of which we had that major point of rejection back in March 2022, which was the 200 moving average rejection before we continued into massive capitulation toward the downside, eventually creating that new low, bouncing from that new low, creating that uptrend to retest that exact point of confluence, meaning this level at 46 to 48k is a major high time frame macro trigger for a continuation back to retest the all-time high. A break and monthly close above this level will push Bitcoin upwards to retest at least that $69,000 to $70,000 range, that all-time high we created all the way back in 2021. However, major resistance is very hard to break, and resistance is resistance until it is not. So it is not a question of if we're going to break, it's a question of how long can we remain under it, where could we potentially go, and at what point would the validation of a breakout be destroyed? Because right now, according to our macro data and our macro charts, we are expecting a break of this level. There is data to suggest a break of this level is coming, but if we go too low, then we could see a shift in that narrative. So the question is, how low could we go while still remaining bullish? Where is Bitcoin likely to go? And of course, how long can all this take? So let's go ahead and jump into it. So as you can see, 48k to 46k rejection. Now, ideally, according to the 4-year cycle, we are not going to be seeing a break of 48,000. Okay, on the monthly chart, we are not going to be seeing a break until at least after the halving. The halving event is in around 94 days. It is after the April 2024 month start. As you can see, this green line represents the halving, this green line represents the halving, this green line represents the halving. You can see every single time we break above that respective dotted trend line, it actually occurs after the halving event. So we would not expect Bitcoin to break over 48k on a monthly chart until at least after April 2024. So that gives us a couple months. If we'll go ahead and draw that vertical line in over here, just to give you perspective, it gives us a couple months, around 2 months, 2 and a bit months, before we expect that break of 48k. So there are a few scenarios that Bitcoin could undergo during this time. We have scenario number one. Scenario number one would be your most common scenario, or would be your most obvious scenario, which would be a constant chop between our lower area of support and higher area of resistance before we eventually break upwards. Scenario number two would be an extended correction for Bitcoin that would result in a break below that 40 to 38k of support, which could take us into a weekly downtrend, potentially down to 35 or even 32 before we then build back up and continue upwards. This would be the lower probability scenario, and of course would be the more risky scenario for Bitcoin if it did undergo as we would see a loss of the weekly uptrend. We enter a weekly downtrend when we break below 38,000. A weekly downtrend could take us to our next support, which is the confluence point between the yearly uptrend, this green line, and the major monthly level of support at 32,000, which if we do lose, right, if we lose this level, we enter a monthly downtrend. So let's go over to the daily chart. How low could Bitcoin go and what would be our bounce targets? So first and foremost, we are now breaking below the 50 EMA. We have lost the Gaussian channel upper band, which of course is not a very good sign. This is telling us we are expecting a correction potentially into this next level of support on the high time frame chart if we lose the midline of the Gaussian channel. So we do have one last potential bounce point, which is sitting right over here, which corresponds with the major high time frame level of support, which we are now retesting. This is kind of our last and final bounce point for Bitcoin until we see a correction to 40,000 at least. So we can see we would expect a correction into this 40,000 range. That would be our first bounce point. If we do lose 38,000, we would then expect a correction into the 36 to 35 range. If we lose that range, we're expecting a correction to 32,000. Of course, the lower we go, the worse the macro is looking for Bitcoin, and the lower the probability we see for an extended correction downwards. Meaning, if we reach this level, there is now a decreased percentage chance we reach the next one. If we reach the next one, there's a decreased percentage chance that we reach the next one. Remember, as the price action moves in one direction, the probability for a continuation in that direction diminishes over time. Okay, so let's go ahead and talk about the short-term charts then. What is happening? Where could we go specifically on the short term? And could we see a potential bounce for Bitcoin? So moving back to that narrative we were discussing, which is a continuation downwards and a correction, we can see we are now retesting a major level of horizontal support. This level of horizontal support, started on the 3rd of December. So it's been about 2.5 weeks now in this horizontal range of support that we have retested 3 times over the last 2 weeks. December, my bad, 7 weeks. 7 weeks of support, even longer guys, even longer. So 7 weeks of support we have retested at least 3 times, coming up now on our 4th retest. We can see that this level has provided an initial base of support between the price action and that 40k to 38k major area of high time frame support. Meaning, if we do lose this level of support, if we break below this range of support we are retesting, we expect a continuation into the 40 to 38k range, which would tick off that first box. Okay, we would tick off this first box as a potential bounce point. This would be the area we would be retesting, and we would be looking for a reversal from this point. So that would be the worst case scenario for Bitcoin right now. If we do lose the support, we are expecting a correction to 40 to 38,000 guys. That is obviously the best case scenario in terms of corrections, as it results in Bitcoin not losing that weekly support level at 40 to 38k, but of course could result in some more short-term blood. Bitcoin is, however, retesting an area of support, and as we know, support is support until it is not. We could potentially see a bounce from here. However, we do have some major levels that Bitcoin actually needs to overcome again for it to officially turn bullish or show a degree of strength. If we are able to break first and foremost above this horizontal resistance that we prior broke down from, which we saw 1, 2, 3, 4, 5, 6 retests on, that would indicate this move toward the downside was a liquidity grab, similarly to what we saw over here, and we would likely see a continuation back upwards to retest these bearish, or should I say bullish, trigger points and resistances on the chart over here around 43,500, 43,600, and 43,250. So for us to show any degree of strength, we need to see the price action break above this level. A break above 41,800 to 41,600 will result in a continuation upward for Bitcoin to retest these high points. If we are able to break above these highs like we discussed in our prior video, we could see a continuation all the way upwards to retest that major level of resistance at 45.5k. Of course, breaking over 45.5k will result in a 48k retest, which could push us back upwards. So you can see how this base of support that we are retesting here could facilitate a continuation upward for Bitcoin to retest 48k. There are only a few issues with that. Issue number one, we've got a lot of resistance above us, that we need to break. Issue number two, we don't expect that break of 48k until at least after April. So even if we see a continuation upwards, it is unlikely we're going to see that break of 48k until after April. We would see, best case scenario, a bounce toward the upside, maybe then a correction back down, a sideways, and then move upwards. That would be the absolute best case scenario for Bitcoin if we had to see something like that. But according to our daily chart again, if we do lose that midline of the Gaussian channel, it is very likely the price moves underneath the Gaussian channel. In this instance, we would be targeting that 40k to 38k level as a bouncing point before we do continue back upwards. It only gets dangerous for Bitcoin. I'll say it again. It only gets dangerous for Bitcoin if we start to drop below this major area of support, which is that 38 to 40k level. You can see already we have this massive gap in the volume over here, the VRPV between 40 to 38. This is a major area of support. If we do lose this level, guys, this 38k level, we are going to be continuing downwards to 35. We are then going to be continuing downwards to 33.3. And if we lose 33.3, we have a massive gap we can fill that could take us all the way back down to retest this last bounce point at 32,000. So it isn't looking fantastic for Bitcoin if we start to drop much lower. However, we have to zoom out when in doubt. And the zooming out tells us, while we were remaining above 38,000, while we are sitting between 38 to 40k and above these levels, we are still looking very bullish for Bitcoin, and there is no reason to be expecting initially a stronger correction than 40 to 38,000 while those levels hold as support, okay? If we lose those levels, that is another story. Then we are expecting that continuation downwards. Now, that doesn't mean you should be overly bullish here. Like we've said already, we were bullish the entire time for Bitcoin, okay? The entire time we have been bullish for Bitcoin from those lows at 16.5k, and we told you the first major high time frame target we're looking to expect these massive reversals to develop from is 48k. So if you were going to sell Bitcoin, you should have sold your Bitcoin at 48k. If you've got a long-term high time frame time horizon, if you're holding, go ahead and hold. It doesn't matter. That is a decision you have to make. If you're holding for the next bull market, there is no reason to believe that bull market's not going to happen. There is no reason to believe Bitcoin's not going to create an all-time high right now, according to the data. So you can go ahead and follow that. But if you're going to swing trade Bitcoin, 48k was the time to sell. You're not looking to sell your Bitcoin as we now approach an area of major support. Remember, resistance, support. This is where you sell, this is where you buy. Support and resistance. Do not flip it around. By the time we actually reach these supports on the high time frame, only then does the weakness that has been developing and being expressed in the price action for the last couple of weeks become visible and obvious to the majority. I'll say it again. Only once the vast majority of the move has already completed does the weakness or strength that is obvious in the price action become obvious to the majority. Generally, when we see these large moves upwards into resistance, we move into resistance with significant strength. It is only when we reach that resistance when we start to exhaust. But the exhaustion is not initially obvious, as the strength is what takes like the cake. People see the strength more than they see the weakness. So that is why a lot of people end up buying resistance, as by the time we reach it, the price action has to have shown a lot of strength, particularly in the high time frame charts. So when you're using those lagging indicators, you're always going to be late to the moves. The same goes for these corrections. As we start to see these corrections, the high time frame indicators are starting to look very weak, and therefore only now people are starting to get bearish. But they're doing so as we now approach an area of support. Something to keep in mind when you're trading, guys. Remember, indicators, for the most part, are lagging. You have to review indicators in a different way. You can't be looking at them at face value and taking the face value of your indicator and apply it to your charts. You're just going to be wrong most of the time. You have to take consideration of what the indicators are doing now and extrapolate your understanding of how indicators move and how price action develops to a future period, and ask yourself, what would it look like in a future period if A, B, or C occurs, and then hedge yourself in the position of what you think is more probable. That is kind of how you do it. You don't just say, oh, we're broken down from this level, okay, time to short. It doesn't really work like that. that, it can work. But overall, if you do that over 100 trades over a couple years, you're probably not going to have a better percentage return than 50%. You see all these videos on YouTube, this strategy, that strategy, 200 move. Look, I tell you right now, if there's a strategy on YouTube that works, I will be absolutely shocked, because first and foremost, mechanical strategies have a very, very low return rate, okay? Generally, they're done over thousands and thousands of trades with very, very specific validations that come up close to 50% returns.